The
blackest of Mondays on Wall Street is producing a terrible Tuesday in the land of the rising sun. Headline News, I'm David Goodnow. The steep slide on Wall Street spurring frantic trading worldwide. The Hong Kong Stock Exchange has suspended trading till next Monday. That decision was made after the Hang Seng Index suffered its biggest single-day fall in the exchange's history. In Australia, the Sydney Stock Exchange is awash in a sea of selling. In the first 40 minutes of trading, the Australian equivalent of the Dow lost more than 20% of its value. The Tokyo market is also breaking new ground. The Nikkei Dow stands at 23,872.80 at the end of the morning session. Now that marks a drop of 1873.80 yen since the market opened. The previous record drop was 831.32 yen last April 27th. Cries of sell echoed through Wall Street today as the Dow took its worst beating since the beginning of the Great Depression. The big board lost more than 500 points in record-shattering trading. Beverly Shook reports.
Bedlam reigned at the New York Stock Exchange as frantic traders dealt with more than $500 million sell orders flooding Wall Street. Even the normally unflappable chairman of the exchange, John Phelan, was a bit shaken.
Well, I'd call it the nearest thing to a meltdown I ever want to say.
Numbers are still being counted, but panic selling sent the Dow Jones Industrial Average plunging 508 points to close at 1738.41. Volume was a staggering 605 million shares. The drop marked a 22% decline, nearly twice that of the drop that sparked the Great Depression. It took just half a day of furious activity to surpass Friday's record volume, which topped 338 million shares. Trading was so heavy on the New York Stock Exchange that the computerized ticker tape showing stock value and shares traded ended up running 2 hours behind actual trading. Words such as Armageddon, meltdown, even crash were being bandied about the floor as traders ran from station to station, telephones jangled, and fights broke out among sweat-soaked traders trying to place their orders. Meanwhile, at the White House, President Reagan tried calming the troubled waters of Wall Street.
I don't think anyone should panic because all the economic indicators are solid.
So why is this happening?
Concerns about interest rates and inflation in the world and the types of liquidity and leverage that are in the world today and which we are dealing with really for the first time.
And how does it compare with the great crash of 1929?
I think we should emphasize that in 1929, it was the low-price stocks, the secondary stocks, that took the major hit. In this correction, and I still think this is a correction, not the start of a major bear market, it's been the blue chip stocks that have taken the major hit.
Some analysts say the main reason behind the selling is fear that cooperation is breaking down between the U.S., West Germany, and Japan, its main trading partners. Fear that would mean a rise in interest rates. Historically, the market doesn't hit its lowest point or highest point at the height of trading activity. So analysts say today's spectacular downside slide could settle still lower in the next 2 to 5 weeks. Beverly Shook, CNN Business News, New York.
Now, in terms of percentage loss, today's drop is far larger than that of October 29, 1929, the beginning of the Great Depression. The Dow dropped 11.7% that day. Today's fall represents a 22.6% drop from Friday. Topping the list of losers today was Teledyne stock, which dropped 49 3/4. Digital Equipment and CBS both lost more than 42 points. Matsushita and IBM also took a heavy beating. The wealthiest man in the United States is one of the many losers in the plunge. Sam Walton, owner of the Walmart store chain, lost more than $1 billion.